Good afternoon, everybody. As people are filing in, we'll just give it a couple of seconds here before we kick off the webinar. That should be plenty of time. Good afternoon, folks. Let's launch the Sky Quarry Investor webinar for today. We appreciate everybody taking the time to join us. My name is Lloyd McNeil. I'm a partner at Trouton and Pepper, where I am a project finance energy infrastructure partner, and I will be moderating today's discussion. Before we begin, I'd like to note that the presentation today may contain forward-looking statements. These statements are based on current expectations and involve risks and uncertainties that could lead to results that differ materially from those anticipated. You can see up on the screen for more information the disclaimer that we typically have for these webinars. You can read that at your leisure. Now, today I'm pleased to introduce Marcus Laun. He's one of the founders of Sky Quarry, and he's an executive vice president and a member of the board of directors. Initially, we had hoped that David Seelock, who's the chairman and CEO, would also be able to join, but he is stuck in some traffic issues and is unable to attend. So Marcus is going to be carrying the water today. In today's session, Marcus would like to cover the following topics. The scale and urgency of the shingle waste crisis, but the opportunity that it presents. Second, Sky Quarry's proprietary technology and the revenue that they have that turns shingle waste into value. Leveraging regulatory tailwinds to roll out their modular waste-to-energy units on a nationwide basis. Fourth is how California's tightening fuel supply creates a powerful opportunity for their Foreland refinery. And finally, building momentum. What are the key milestones that the company is looking forward to, and the case for reevaluation in 2025? Following the presentation, we'll open up the floor for live Q&A. So if you have questions, the chat box below is the place to put them, and I will start to look at them as we move through the presentation. And with that, I'm happy to kick it over to Marcus Laun to kick things off. Marcus, take it away.
Thank you, Lloyd. Yeah, I'm going to read some prepared comments around these slides. I think we have to kind of divide the presentation a little bit for our new shareholders and people that are new to the story. Plus, we don't want to bore our legacy shareholders to death because a lot of them are on the call and they've heard a lot of this before. The real juicy stuff is going to be at the end today. So please stick around. Sky Quarry was founded to solve a problem created by asphalt shingle waste. Every year, millions of tons of asphalt shingles are torn off roofs and sent straight to landfills. But the opportunity exists around recycling that waste, recovering a potential 20 to 22 million barrels of oil, and all the other material that's in a shingle is recyclable. We estimate it's a $4.4 billion market opportunity. What makes us different is that we're not just a recycling company, we're building a fully integrated energy platform. We will collect the waste, extract the oil, recover the valuable materials like aggregate, sand, fiberglass, refine that output, and sell the end products, turning a massive environmental problem into a scalable, sustainable business with real economic upside. Next slide. When you look at Sky Quarry, there are a few key reasons we believe it's an attractive investment right now. First, we have revenue. We're not a concept. We're operating and generating sales today. Second, our business model is scalable. Leveraging our modular technology, we can expand regionally, quickly, and cost effectively. Third, we already own two major facilities, including a refinery that gives us downstream capabilities that our competitors don't have. And finally, we're riding powerful tailwinds. Landfill regulations are tightening, fuel supply chains are shifting, and our current operating region, and demand for sustainable domestic energy solutions is accelerating. Slide 7. The process starts at the source. Roofing tear-offs. These shingles are typically discarded and sent to landfills after a roofing job. But with Sky Quarry, that waste will take a different path. First, tear-offs will be collected and delivered to one of our modular processing facilities. There we will sort the material, separating the sand and the granules to be sold locally, and prepare the rest for extraction. And here's what's important from a business standpoint. We will be generating revenue from day one. Roofing contractors and waste haulers will pay us tipping fees to drop off the material, which means we will be paid before we even start processing. The bitumen and limestone-rich content will be ground up, compressed into briquettes, and shipped to our facility in PR Spring. That's where our proprietary technology will go to work extracting the hydrocarbons from the waste. From there, the recovered oil will be sent to our Foreland refinery in Nevada, where it will be blended, refined, and made market ready. This is how we will turn landfill-bound waste into fuel, construction materials, and multiple revenue streams, all within a closed-loop, sustainable system. Slide 8. One of our biggest strengths is that we're fully integrated from waste collection to refined fuel. That gives us control, efficiency, and stronger operating margins than most competitors. We will start upstream with our modular ASR units engineered to be scalable and cost-effective. Each front-end processing unit is designed to process up to 100,000 tons of shingle waste annually, generating revenue from both tipping fees and byproduct sales. Our first unit is expected to be deployed this year. In the midstream, our PR Spring extraction facility in Utah is where we will extract oil from both asphalt shingles and traditional hydrocarbon-rich sands. The site is currently being retrofitted with commissioning expected this year. Downstream, we own the Foreland refinery in Nevada, the only operational crude oil refinery in the state. It's already processed nearly 500,000 barrels of oil per year in the past and will soon play a key role in refining our sustainably produced oil. Together, these assets form a vertically integrated platform from waste collection to fuel production. We will have control over every step of the process, which means we can capture more value, move faster, and scale smarter. Next slide. As we explained earlier, our business model is designed to generate revenue before we even processing a ton of material. That's because we get paid to take the waste. Roofing contractors, waste haulers, and landfill operators will pay us a tipping fee, typically between 45 and 150 per ton, just to take their used shingles. And because most of the products we recover, like oil, aggregates, and other industrial materials, have real market value, nearly everything we produce will contribute to our profit line. Slide 10. We're operating at the intersection of three major market forces, and we believe all of them are moving in our favor. First, the regulatory environment is changing fast. Cities and states across the U.S. are setting aggressive targets to divert construction and demolition waste from landfills. In places like Austin and Seattle, diversion mandates are already at 50 to 80%. In California, it can be as high as 75%. Second, regional market shifts are creating supply pressure, especially in the fuel space. Phillips 66 is shutting down its Los Angeles refinery, and by the end of 2025, and California's ABX2-1 legislation is adding even more strain to the system. What that means is, California is adding regulation layers to the refiners in California, making it more and more difficult for them to operate. And in some cases, they're just packing up and shutting down. That creates a big opportunity for us in Nevada to take that oil and refine it or sell into that market, or actually take the oil that would traditionally come into Nevada from California and supplant it with our own. So it's a big opportunity. Third, there's increasing demand for sustainable fuels. The market for low carbon and renewable fuel is expected to triple over the next 20 years. We're very confident that the waste shingle material will be a very low cost feedstock to make sustainable fuel. All of this adds up to one thing. Sky Quarry is aligned with where the market is going, not just in terms of policy, but in terms of infrastructure, economics, and long-term demand. Slide 11. I wanted to do a bit of a deeper dive on what's happening in the western states in California because it's extremely important to our Nevada refinery. California's refining capacity is shrinking. New regulations are making it harder to operate, and refinery closures are accelerating, including a major Phillips 66 facility set to shut down later this year, which supplies nearly 8% of the state's capacity. And in looming import tariffs and growing reliance on overseas crude, the Western fuel market is facing real volatility. A few people know that California imports about 60% of the oil that is used in California every day. So that tariff implication is significant. Meanwhile, Nevada's demand is rising fast, driven by population growth and a booming mining sector, especially lithium. These operations rely on massive volumes of diesel and fuel to keep trucks, processing plants, and remote infrastructure running. This is where our refinery comes in. We have a capacity of 5,000 barrels a day in our Nevada refinery, and we're already seeing interest from fuel distributors and end users looking to secure long-term local supply. As production ramps up at our Utah facility, we will begin blending in recycled heavy crude, increasing output while enhancing sustainability. The oil producers in Utah and Nevada are also increasing production, and we're the natural home for that material. So, we want to make local products for the local market. Slide 12. As part of our national expansion strategy, we're building a network of modular facilities in key markets across the country. These units are designed for rapid deployment and scalability, enabling us to expand quickly in high opportunity regions. By locating them close to both the waste source and the end markets, we can reduce logistics costs while generating revenue from day one through tipping fees and byproduct sales. To support this rollout, we've secured exploratory partnerships to ensure steady feedstock supply. Our LOI with Southwind RAS could provide access to over 1.2 million tons of recyclable shingles annually, while our letter of intent with RB Residential Roofing is expected to supply a consistent stream of post-consumer shingles from across the U.S. These aren't just partnerships, they're launch pads, giving us the ability to scale quickly and confidently with supply and market access already in place. This is a replicable low capex model designed to expand region by region. Our goal is to deploy 10 modular units by 2030, each one turning local waste into local value and together creating a national platform for sustainable growth. Slide 13. Recent milestones. Over the past few months, we've made meaningful progress across all areas of the business, setting the stage for growth. A major milestone was the completion of our 2024 CapEx program at PR Spring. At the same time, we completed major refurbishments at our Foreland refinery in Nevada, which is now preparing to ramp up to a capacity of 5,000 barrels a day. These upgrades will enhance our ability to process both traditional and recycled feedstocks, strengthening our fully integrated platform. We've also advanced our national expansion strategy by securing long-term feedstock sources. Our first modular facility, ASR facility, is already 80% complete and is on track for launch in 2025, with 2 additional modules in development. We believe these milestones reflect our continued execution and will set the stage for growth, revenue generation, and broader market reach in the year ahead. Slide 14. As we look ahead to 2025, we believe Sky Quarry is well positioned to accelerate on all fronts. From a market standpoint, refinery economics are trending in our favor. Refined product profitability is improving, and demand for regionally produced fuel is rising, especially in the Western U.S., where supply constraints are tightening. This creates a favorable environment for our Foreland refinery and supports premium pricing. At the same time, we've been strengthening our balance sheet. Debt balances are declining, giving us greater flexibility to reinvest in operations and scale efficiently. And operationally, we're executing. Asset upgrades at PR Spring are nearly complete, with commissioning planned for Q3 of this year. This puts us in position to fully activate our integrated production model and begin generating meaningful revenue. Altogether, we're incredibly proud of the progress we've made and excited about where we're headed in 2025. It's shaping up to be a defining year, one where all the hard work we've put into building and strengthening the business will start generating the kind of growth and traction we've been working toward. On behalf of the entire Sky Quarry team, thank you for taking the time to be here and for your continued interest and support. We're truly grateful to have you on this journey with us. That brings us to a couple of final points I want to make that aren't part of the presentation, and we'll open it up for questions. But before we do, thank you again. I know the natural question, that I've been getting from investors is, the broader market. What's happening with the stock? Let's acknowledge that the broader IPO market has been challenging for years, and mostly due to factors beyond our control. Many newly listed companies, not just ours, have seen their share prices decline. I would say at this point, the real market trading for us has been some selling pressure and selling more sellers than buyers, as they used to say. That said, we're actively working to turn that around. We're increasing visibility and making sure more people understand what we're doing and why it matters. We've seen the stock respond positively to small amounts of buying interest lately, which leads me to believe that we're on an uptrend. With a couple of strong up days in recent weeks, there's a sign that the selling pressure is easing and interest is building. We believe our shares are undervalued, especially given the 140 million in assets that we've built and the progress we're making. Recreating what we've built would cost about 150 million, and I believe we're nearing a turning point. And we're committed to making sure the market begins to see what we see. I've personally bought more shares because I believe in the long-term value of what we're building, and I think others will too as we keep executing. So if you're holding shares and wondering what to do, I'd encourage you to look beyond the short-term price swings. The current stock price doesn't reflect what Sky Quarry is worth, not in my opinion, and not based on the fundamentals. One transaction that I'd like to have investors take a look at would be the QXO transaction with Beacon. Beacon Roofing is about a 12% market share, 12 to 15% market share in the roofing industry in the United States. It's a public company, and it was recently acquired by QXO. The leader of QXO, has a track record of rolling up and consolidating and making industries more efficient. He's done it in equipment rental, he's done it in storage, he's done it in waste, and now he's doing it in the roofing industry. If we layered the Sky Quarry model into what Beacon has as a platform, it would reflect about 500 million in potential revenues based on the waste stream that Beacon touches every year. What is interesting is that Beacon is currently buying carbon credits to offset its carbon footprint. And if they aligned with us, we as a partner could end up generating the carbon credits that they would need to offset, what they're doing in the marketplace. So the industry 5 years from now is going to look a lot different than it does today, with players like QXO and Beacon consolidating and doing a roll up. There's a lot of interest in the roofing industry, and we intend to help change it to be a more sustainable industry. Now we'll take over some questions.
Thanks, Marcus. A couple questions have come in. First one, what is the incentive for the roofing contractors to pay the tipping fees to Sky Quarry rather than just to put the shingles into a landfill?
There's a couple of them. First of all, roofers and builders, we have a lot of them actually as shareholders. They see the value of that material, and they just think it's a shame to throw that material out. Most people don't know that construction and demolition waste is about double municipal solid waste in the United States. So it's a big problem. The EPA wants to divert that waste from landfills as much as possible because a lot of it is recyclable. And so what's happening in municipalities is, in order to pull building permits, you have to prove that you're recycling a certain amount of the waste that you create. So we intend to have a lower price and better logistical solution for a roofer, because our transfer stations will be closer than a landfill. We intend to undercut the pricing of landfilling cost so that there's a financial incentive, and then there's also a business incentive in that you're not going to be able to get building permits if you landfill all your waste. You're going to have to demonstrate that you're recycling part of it to actually just stay in business. So the tide has turned, and the enforcement's going to come behind it. So everybody's very positive, and in speaking with companies like Beacon, they want a sustainable solution, because there's a lot of pressure on these big shingle companies to have a partially post-consumer recycled product, and the shingle companies themselves are investing tens of millions of dollars in that effort.
Marcus, you mentioned the proprietary technology. Can you expand on that a bit? Are there patents, trade secrets, other protections that are part of the process?
Yeah, we have patent protection on some of our IP. The rest of the IP we hold as trade secret, and then there's also just good old fashioned know-how. So it's but if you look at the picture behind me, that's really our advantage, is the fact that we have a $50 million facility ready to go, or almost ready to go, and nobody else does. That facility, if we actually put 100% shingle material through that plant, it would have the capacity to recycle 10% of the nation's waste today.
One of you mentioned that facility at the PR Spring, I assume, is so one of the middle stage not yet operational. That's sort of the question that one of the investors has asked about, and the follow-up question is, what do you expect to have working on sort of end-to-end fully closed system that you'll be able to demonstrate works?
No, like I said, we want to complete the retrofitting and have it, commissioning this year. So, yeah, the holdup to some extent is financing, and we're in discussions with funders every day, but we want to take the right kind of money and people that fundamentally believe in the company, and that's why we're not just going to take money that isn't right for a good fit for people with a long-term view on what we're trying to achieve.
Can you talk a bit about the current debt, plans to reduce it?
The ideal situation for us is to replace the current debt with lower cost debt that is a pure fixed income product. So just a coupon and kind of a 5-year maturity, and that's really what we're in the market looking for. We do have, as far as I'm concerned, we have a pretty good track record as far as paying that debt down. The lines of credit that we had over the past year, we've been able to pay down about 40% of them over the past 12 months, considering we've had I would say difficult marketing conditions or operating conditions. The ability to pay down $4 million in debt, I think, was pretty solid. So we're whittling away at it. Our lenders are supportive, and we're gonna refinance in an attractive way and move the company forward.
Can you talk a bit more about the LOIs you mentioned in the presentation, and expectations to turn those into binding agreements?
Yeah, we're pushing the LOIs forward apace with completing the equipment that we want to put in place. So it's really just a matter of identifying the best relationship. We want to have a couple of different places for our equipment to go, but ultimately the people that we have the LOIs with are more aggressive about moving forward than we can be, just because we're solving big problems for some of these participants, where some of these players have stockpiles of shingles that they're trying to get rid of, that they've been collecting for years, and so we're providing a pretty big solution to this problem.
Can you talk a bit about some of the larger shareholders? A couple of questions here about, JP Morgan, for instance. Are they or people like them still invested in Sky Quarry?
Yeah, JP Morgan hasn't sold a share, and is still supportive of what we're doing, and believes in the business model. So we are actually in the process of having ongoing discussions with other significant institutions, and they we believe that they will start entering the market now or in the future. Often when you deal with a large institution, they don't move that quickly, but once you kind of have them sold in, they start nibbling away at the stock, and building a position, and they won't necessarily tell you about it until they become significant.
Mhm. Can you talk a bit about Sky Quarry's financing and capital strategy over the next, say, 12 to 18 months? What sorts of funding might Sky Quarry try to access in that time period?
So we put out a press release as far as our European efforts, and that is really where a lot of my focus is as far as capital raising. And the reason for that is the Europeans have they have a ton of money, first of all, but they've been focused on sustainability for, I would say, a lot longer than we have, and it's also more of a factor in their investment decision making than traditional U.S. based institutions. So we're targeting a European investor base for the fixed income financing, refinancing that we're looking at, because there's about 4,000 institutions that have a mandate to look at sustainability when making an investment decision. So we play a factor in that, because there's a limited number of companies that have a real sustainability component, and that the assets that those institutions manage is about 2.7 trillion. So we actually have an analyst in Europe connecting with those institutions on a daily basis, and we're building up a database of those institutions to market to as we move forward. So we like European investors because they're patient, they get comfortable with the technology, and the interest rates are lower over there compared to here, so we can actually raise money at a lower cost of capital as well. So it's a win-win.
In terms of the modular facilities, any sort of details about that? A couple of folks have asked, for instance, are you thinking of Ontario or other Canadian provinces, other parts of the southeast? Maybe Marcus, can you just sort of talk about how you're going to roll out if you know anything about that yet?
Yeah, we don't want to give away too many ideas, but we're going to focus on the US as far as our shingle recycling rollout, just because it's always easier to build those relationships kind of close to home, and obviously the US market is 10 times the size of the Canadian market. So just California, Texas, Florida, the southern states, New England, where you have real concentration. You have a lot of not historical homes, but legacy homes that are generating this waste. So you're looking at places like Texas, where you now have hurricanes rolling through and ripping all the roofs off, and you have hailstorms in Denver, and you have in Phoenix, you end up with the sunshine just burning up these shingles every year. So there's a lot of opportunity just in kind of the southern swath of the US, focusing on markets that are relatively densely populated. You have a lot of these single family homes, suburban sprawl, because that's where you're really going to generate the shingles, and just going from there.
Marcus, with the stock price currently below $1, any concerns about delisting risk from NASDAQ? And if so, how do you plan to address it?
Uh, yeah, obviously we want to get the stock back above $1. NASDAQ, does give you a pretty good window as far as making that happen. So I think, from our perspective, we're lifting up, an investor relations campaign and an outreach to a broader shareholder base. Uh, a lot of our shareholders from the crowdfunding side are are not necessarily public market participants. They kind of just, bought a bunch of shares privately. So we need to step up our outreach to public market participants to get the shares higher. And this webinar is part of that effort.
A question here, or it's maybe partially a statement here. Let me just read it to you. In 2025, it says Sky Quarry plans to open its flagship extraction facility, which has the potential to produce up to 2,000 barrels of oil per day. Can you let us know what is the status of that facility, and are we extracting 2,000 barrels of oil per day?
Now, we're still in the process of completing the retrofitting on the PR Spring facility. So the intent and expectation is that we will have it operational this year, but it's not operational yet.
Let me scrolling down through here. Let's see. So, Marcus, is there any similarity, I guess, or opportunity, I suppose, to take advantage of regulatory incentives that are available for, renewable fuels, the whatever the low carbon fuel standard in California, for instance. Some other states have similar processes or incentives. Is the fuel eligible for any financial incentive?
Yeah, we believe that there will be tax benefits accruing based on making a low carbon fuel. What's really invigorating for us is actually we are in position. We recently got an estimate from a potential provider uh, showing that the potential carbon credits that we could generate off of reducing the carbon intensity of our fuel could be over $100 million in value over the next 10 years. So there's big opportunities, on both, government programs, energy programs, carbon reduction. There's a lot of different things we can touch. We just, we're a small team, so we have to block and tackle every day, and then grab those opportunities as they come along. We've already gotten inquiries from companies as big as Union Pacific, looking for sustainable fuel. So regardless of what the government mandates or what the tax incentives are, a lot of big companies have made significant promises to shareholders as far as reducing their carbon intensity over the next 10 years and going on to 2050. And we believe that using shingles as a feedstock for fuel is going to be the lowest way that you can make a sustainable fuel and not have a big carbon footprint. I think there's a big disconnect between what people think is sustainable and what people equate sustainability with no carbon footprint. But the irony is, most of the sustainable fuel has a huge carbon footprint. So they're making massive investments and jumping through amazing technological hoops to try and reduce the carbon intensity of biofuel, and to use waste asphalt shingles as a feedstock for fuel is an amazing solution. And as we said earlier, it's a multi-billion-dollar opportunity.
And a lot less carbon intensity than generating biofuels from pyrolysis or some other procedure.
Absolutely.
Um, what are your thoughts about the current regulatory environment in DC in particular, federally, and the implications that it might have for the Sky Quarry business?
I, I think everything ends up being a benefit for us because, we are a local operator, so we're creating local jobs. In our region, you're going to see more drilling, and in a market like California where they're importing 60% of their oil, that oil is going to get slapped with a tariff potentially, and just uh, improve or increase the local demand for locally sourced oil as well as locally refined oil. So we're you know fingers crossed. We think all of these things are a wind at our back. The other benefit on the regulatory side is, as kind of regulations fall away on kind of the construct and build side, it's going to make identifying and building our regional facilities easier. So we'll be able to accelerate the rollout timelines, because permitting will hopefully be streamlined, et cetera, et cetera.
Is the permitting environment fairly onerous? I mean, it's still probably state by state or local by local, but what has been so far the experience on the permitting side for the modular facilities?
uh, we haven't identified specific locations, but in our discussions, I would say the regulators are very supportive. You know, they they understand the problems that we're trying to solve and how it benefits everybody. That you're reducing dependence on landfills. You're not throwing away valuable resources. You're creating jobs. You're reducing the carbon intensity, because a lot of this waste ends up moving, hundreds of miles and sometimes thousands of miles. To talk about uh, moving waste and carbon footprint, we met with Union Pacific, and one of their biggest products that they move is garbage, and people don't realize it because they only see what's happening down at the end of their driveway, and a truck comes and picks it up, and it disappears. But there's a lot of infrastructure and a lot of energy consumed just to handle this waste stream.
Mhm. Well, let's talk about that a little bit. How do you plan to get the briquettes, I guess, so to the processing facilities? Is that all going to be pretty much by rail, and what's that picture look
Yeah,
like?
I would say, ideally we're going to use rail as much as possible because on a per mile basis, it's the cheapest. And our facility is within, you know, I would say, operating distance from kind of Union Pacific and Burlington Northern lines. So we see that as the logical approach. Um, so logistically, Utah is not ideal for the shingle side, but over time, we that's why we want to build regional facilities that are going to take up a lot of that demand, and create a very efficient collection capacity.
Um, One question here from perhaps one of your roofers who's also a shareholder. How can the shareholders get involved with the company to begin to collect shingles on the local side?
I think they should reach out to us, and we have a database of potential partners that we're in discussions with, and we basically light up those relationships as we start targeting a certain market, and would love to make that connection.
Is there some scalability or flexibility for the process that you have, Marcus, for instance, to recycle asphalt, road asphalt, or other products that have a hydrocarbon component to it?
Uh, well, road asphalt is already pretty widely recycled, and so there's that we're not interested in that necessarily, just because it's already been done and it's already par for the course. If you look at road asphalt, the beauty of the oil that we make is ideal for kind of rejuvenating recycled road asphalt, because all they really do when they rebuild a road is they grind up the old asphalt, they lift it off the road, they take up say 2 inches, and then they just put it into a machine and mix it with fresh asphalt oil to rejuvenate it and add some chemicals and polymers, and that's your new paving asphalt. So they actually have a process where they can lift it, rejuvenate it, and put it back down in one swoop. But yeah, so that's a mature business. We're just trying to, you know, use obviously similar techniques of rejuvenation to create a circular economy around the shingle side. I mentioned, the Beacon merger. Beacon has, over 500 locations across the country distributing shingles. A tie-up with them would mean that uh, if we created a circular economy around that, we would get 2 million tons a year from the Beacon locations, could process that material, and a, a good percentage of waste asphalt shingles can actually be used to make new ones. And I think as this recycled shingle opportunity matures, I think that percentage will get higher and higher.
Couple of questions here, just on sort of gross profit, EBITDA. The Let me just try and find one here. Gross profit expected to be negative in 2025. Is that true? When do you think will the company will start to have positive net revenue?
I can't, make any projections on this call just because of my lawyers would have a field day. But our intent is to get to cash flow positive and profitability, very quickly, and having the PR Spring facility up and running, does that. So we're looking, for that refinancing, additional capital to increase production in Nevada, just on the refining side, but then supplementing, that operation there with, oil coming in from Utah is going to be, the big inflection point for our finances. But that being said, I haven't really talked about, the California opportunity, but Nevada imports 150,000 barrels a day, and with the declining production capacity in California, we think that suppliers are going to be less and less willing to sell product into Nevada, especially because part of the new California regulations require refineries to hold 2 weeks worth of inventory at all times, and that increase in working capital and the increase in inventory that the California refineries have to manage reduces their willingness to sell product into Nevada. So we are already seeing major industrial fuel users in Nevada coming to us and looking for, long-term supply contracts, because they think that there's going to be a spike in pricing and a spike in demand, just because the supply from California is going to dry up. And so we think that we're well positioned to benefit from a higher gross margin in Nevada, as well as much more demand for product.
Marcus, some of the other LOIs that Sky Quarry has recently signed up, what do they look like in terms of details? Are they for feedstock deals? How do you see those turning into agreements?
Yeah, ultimately, I can't really speak to that because it reflects ultimately non-public information at this point, so we have to disclose it, through an 8K and a public filing. But you know, everything that we're doing on the LOI side, or the business development side, is really about laying the groundwork for creating that circular economy around the shingles, or increasing our potential supply. So it's working with waste companies as far as feedstock, potential partnerships on growth, or building relationships that ultimately end up being customer relationships, where we're supplying material to the shingle industry as the first layer of creating that circularity around these products.
For the modular facilities, what's the approximate lead times for getting them up and running?
I think it would depend on the market, but I think from our perspective, we've been kicking around, kind of an 18-month number, as long as the permitting process was pretty simple. The idea behind the modular facility is to actually engineer them so they're cookie cutter and can be replicated easily. So I think once you get the first one done and get the kinks out of it, I think the follow-ons, come much more quickly. I think as we demonstrate, that we can handle this material and make money at it, I think a lot of municipalities will come to us and kind of roll out the red carpet and say, we want one, because it'll, generate revenue, generate taxes, create jobs, and reduce, dependence on landfills and reduce carbon footprint. So it's a beneficial opportunity.
And there's no like long lead equipment that you need to procure from like a third party who there might be like like a transformer where you got a 4-year wait period or something like that. This is all just manufactured
Yeah, is to use
almost
industrial
bespoke.
equipment that's used in other. I don't know. You guys, can everybody hear me?
You lost you for a bit, Marcus.
Okay.
Back on now.
Okay. Uh, where was I? Now, the intent is to use effectively off the shelf kind of manipulation equipment as far as the physical property. Oh, I'm back. Yeah. So the intent is to keep that design simple and use nothing custom, and that way we can we can shorten up the lead times and reduce the cost of duplication.
In terms of the process, Marcus, what types of waste does Sky Quarry itself generate, and how do you plan to dispose of it?
The shingles are 100% recyclable. There's no waste.
Excellent. Yeah. Uh, okay. Coming to the end of some questions. Can you speak? I don't know if this is something that you can comment on, but maybe just generally. But the broader shingle manufacturers like Laun's Corning or whoever else are the folks that are involved in making the shingles. Are they folks you have relationships with, or is there a plan to use any of their products in the manufacturing process?
So the shingle makers are very interested in what we're doing, and I think the time for those we've had discussions with numerous shingle manufacturers, and the they really want to see PR Spring up and running to see how we do it, and that's, I would say, the kickoff point for everything that they want to do. And so, but we have those relationships. We know who they are. We know they're watching, and they'll be in touch.
Mhm. Are the facilities that you'll have, including PR Spring once it's up and running, are they large users of energy?
Yes, they do use a bunch of energy, and the intent is to use obviously sustainable energy if we can, or but ultimately, the energy that we use gets calculated into the energy that doesn't that is conserved, right? So the carbon credit calculation is, what is the energy use and what is the carbon footprint of a barrel of traditional oil coming from, the oil that, a large chunk of the oil that California buys every day is coming from Saudi Arabia. So think about the carbon footprint that barrel of oil has compared to, us, using chemicals and using some grinders to harvest a barrel of oil out of a ton of shingles. It's a bunch of energy, but it's a lot less energy than shipping a barrel of oil from the Middle East.
Right, right. A couple of questions again, but I think you've indicated that the PR Spring facility commissioning in Q3, did you say?
Ideally,
Yeah.
that's the goal. We're doing work on it every day, so it's getting closer and closer. So we want to, we're kind of itching to turn it on. So
Yeah.
we're getting closer.
What's the job creation impact for the business, Marcus?
Each facility will probably be, kind of that 30 or 40, person job creation. So, but beyond, the job creation at the facility itself, our intent is to create a national network where, we're actually providing the service, or you have franchisees that go to curbside and collect the shingles as a dedicated feedstock. So having our own dumpsters, or having our own collection boxes, or super sacks, or whatever we determine will be the right way to do it. And that infrastructure, that network of collection that we intend to stand up, will be a footprint of a company, similar to 1-800-GOT-JUNK or something like that. So it'll be a national network of collection, brokers or agents, or jobbers, or however you want to call it, franchisees, that bring us that dedicated waste stream. And so we've modeled that, and that would create thousands of jobs.
Mhm. Let me just go back to the commissioning a bit, Marcus. So once the project, or so once PR Spring is commissioned, it's not a long time period to get to COD from there, right? Like that's commissioning and commercial operation are pretty close in time to each other.
Yeah. Now, all commissioning is we start slow and then just build up. So, the oil that we create during commissioning, will go to the refinery and then be sold. So it starts as a trickle, and then builds up. And as a reminder, that facility is designed to extract 2,000 barrels a day.
Okay. Well, Marcus, I've sort of run to the end of some questions here, and we're kind of bumping up on the hour. Any final thoughts from you? Otherwise, I think we can probably wrap up.
Listen, I think I've covered a lot, and I appreciate everybody hanging on to the end. We're, I talk to investors every day, and that they kind of look at the chart, and they think that they're not seeing what's happening at the company because they look at the stock chart, and the stock doesn't reflect what's happening at the company. I am more excited about where we are with the company today than I ever have been, because we're that much closer to the day where we fulfilled the commitment that we made to our shareholders, and I take that very seriously. We're really excited. We have revenues, we have a big shareholder base, we have a NASDAQ listing, we have a ton of assets, and we're right around the corner from lighting everything up, and demonstrating what we've been promising, and I find that very exciting. Obviously, to watch the stock move around and fly around every day is distracting, but ultimately, the value is there, and our business model is there, and all the trends in the industry that I highlighted on this call are a wind at our back. So it's really just a matter of keeping on marching until we get to where we're going.
Yeah. Yeah. 25 will be an important year.
Yep.
Well, thanks very much, Marcus. Great to talk to you. Thanks for filling in the investors and the latest, and we'll give you all back 4 minutes.
All right. Thank you, everybody.